What is going on, everybody? Welcome back to another video. Today we're going to be basically ranking all of the PRR entry models, concepts, confluences, all that kind of stuff. But we're going to be doing it in like a tier list format. Also, I did want to mention I made a completely free futures trading course called The Path to Profitability. It discusses everything from beginning with prop firms and goes all the way to learning my strategy. Also goes into psychology, risk management, position sizing, ICT concepts, literally everything you need to know to become profitable as a futures day trader. So I have that linked in the first link in my description. Go check that out. Once again, it's completely free. And also, if you have any questions whatsoever, whether it's this video or in that futures trading course, just join the free Discord and send me a message, and I promise to get back to you. Now, we're not going to be doing this in any particular order, so let's get started with our first concept and entry model. The first one we're going to be ranking is just a simple fair value gap retracement PRR setup. So I would confidently put this as a B tier. And actually, you know what? I think I'm going to change that. Let's do an A tier. And I'm going to show you guys an example right now because that actually happened today and the trade went pretty well. So I'm going to go ahead and get into that trade recap and show you guys how this works. Guys, here's the FVG fill PRR that we just rated. And basically, we saw this today, which is Thursday the 16th, and this is how it works. Basically, you see we had an inverse fair value gap right here. Price ran all the way up, took out liquidity over these highs. Price displaced downwards and formed a fair value gap. So we're going to mark out a fair value gap. We're going to mark out the top one. You can mark out all of it if you wanted, but it doesn't really matter. We just want the top of it. Then, what did we see? I'm going to zoom in. We saw price made a fair value gap going through the previous one. Now, what do we see right after the fair value gap gets filled? We see basically price stalling, and then we see a massive candle to the downside. Right after we filled this fair value gap right here, we formed an inverse fair value gap right here. Now, where would we put take profits? Basically, we're going to take a fib retracement from this low, and we're going to run it all the way to the peak high up here, and look where price is bouncing. It's bouncing off the equilibrium level. So we enter off of the close, so we go short after the close, and then we put our first take profit at around 30 points right at equilibrium. Look, price tapped equilibrium, rejected a little bit, started rejecting, and then price displaced downwards towards the original fair value gap zone. So you could have had your take profit at this fair value gap, or you could have had it at this low down here. These are always fun to trade. You usually see these a couple times a week, and these always do pretty good, and they have a really nice risk to reward on them. Now for our second thing, obviously if we just set a fair value gap, we have to do what's a little bit better than a fair value gap. So we're going to go with an inverse fair value gap at our S tier. This thing is extremely powerful, and I use this for basically all of my entries. And the best ones possible will always have an inverse fair value gap. This is the highest win rate concept, and this thing is absolutely insane. I'm going to go ahead and show you guys some examples with the IFVG right now, and we also hit a trade with that today. So here's a great example of an inverse fair value gap entry that we hit on the same day as the last recording. So what do we see here? We saw a higher time frame fair value gap get filled right here. That's not necessarily too important, but then we saw that these swing highs right here got swept on NASDAQ right here. We formed a fair value gap on the way up, and then even though we had a little bit of resistance, we never filled the fair value gap completely, and then we saw an absolutely crazy displacement through it. Okay, so we have to see strong selling pressure through it, and we saw exactly that. Then all we did, we entered on the close of the down candle under, and I believe I actually got filled up here. So yeah, I got filled a little better. But then you throw your take profit at the swing low down here. Boom, price smacks it and forms another entry right after. So it was 100 points if you held for the full TP on that. So yeah, and then you could obviously just throw another fib on it and take trims at 50%. So there you go. It's fun to look at how price kind of bounces around equilibrium a little bit. So we have our equilibrium right here. Then look what price does. rejection, run through, rejection, all that crap, and then it finally runs through it completely. So you can always set trims at equilibrium and then have your runners run until the other draws on liquidity, like the swing low and the swing low over here. Now for our next entry model / concept for the PRR, we're going to be using an order block. So I would definitely not put an order block at S tier or A tier, as an order block usually gets matched up with a prominent pull of liquidity. So this is not super important given that we're already going to be looking out for prominent pulls of liquidity, and an order block is basically pointless if we're already looking for prominent pulls of liquidity. So I can confidently put an order block at D tier. Now there's nothing wrong with an order block, I'm just saying that there's other ways to spot prominent pulls of liquidity, and this doesn't really matter that much. Now for the next concept that we're going to be listing up here, we are going to be putting a liquidity sweep somewhere on the board, and I'm going to go ahead and put this at an S tier. Now the reason why I'm putting a liquidity sweep at the S tier is because it is 100% needed for every single PRR entry. You cannot take a PRR entry without having a liquidity sweep. So this does not matter if it's external or internal range liquidity. I would like to say that I love trading external range liquidity PRRs all the time, way more than internal range, just because they have a higher probability. I'm going to go ahead and give you guys an example right now and explain that. Alright guys, so now we're going to be using another example from the same exact day. Literally we formed so many amazing PRR entries on Thursday. So I'm going to show you guys why a liquidity sweep is important. Look right here, we have our swing low. Look how price sweeps the swing low, and then we start basically recouping. We inverse the fair value gap because look at the buying pressure. Extreme buying pressure, so we're already having a combination with that IFEG that we just mentioned. We swept the liquidity, and now look, price runs up to fill this imbalance. Let me just actually use a line tool just so it's a little more accurate, but look, price fills the imbalance and literally just sits and kind of consolidates for a while and then rejects. I know we do end up going a little bit higher after to take out liquidity over these highs, but it's just important to show that liquidity controls this entire strategy. So yeah, like I said, you 100% need a liquidity sweep for every single PRR trade. And yeah, you literally cannot do one without it, or else it's going to fail, and it's absolutely required. And if you don't, you might end up taking something like this where you see price sweeps the swing high, it then forms an IFEG, and then you get like, what is this, like 10-15 points of profit before it reverses on you. For our next concept that we are going to be listing on the chart somewhere, we're going to be using a market structure shift. Now I'm going to confidently put a market structure shift at B tier just because there are things that are way better, just like having an inverse fair value gap or literally just a liquidity sweep. Market structure shifts usually don't have the highest probability of winning. They do have possibilities to win. I just don't see as much high probability setups getting formed whenever you see a market structure shift. So even though that you guys can enter with a market structure shift entry, there are just better ways to enter on the PRR trades. So right now I'm going to show you guys an example of a market structure shift inside of a PRR strategy. You guys already know I'm about to pull another example from the same day as all the other examples. So we're looking at the chart right here. We have this IFEG, and then we had a fair value gap get formed, so it's BPR. And then we see price retraces downwards. And what we're looking for in the market structure shift is we're looking ideally for price to sweep under a level of liquidity, which it did. And then we want to wait for basically a retracement higher. Then we want to see price drop. So the whole point of that is to create a swing high, which we created a swing high with this candle, but we can just call this relative equal highs right here. Then what we're going to do is we're going to mark this out, and we want to see basically displacement through that. So look what the market did, and as we can see, all green candles through the swing high. And what do we see get formed through the swing high? A fair value gap, which gives us better confluence that this will hold. So we saw exactly what we needed, which was displacement shown by this candle right here, right through those relative equal highs / that one swing high, which then now makes this a market structure shift. Now, if you were to enter, where are you going to put take profits? You already know, throw a fair value gap. We have our fair value gap right here. Put your take profit at the fair value gap. And what do you see price do? Price fills the fair value gap and rejects. It's really that simple. Just use your liquidity and fair value gaps as your targets on these. So there's absolutely nothing wrong with entering on a market structure shift for the PRR strategy, but the IFVGs are so much stronger, and I would take an IFVG over a market structure shift any day. And the thing is that there's just way more of a higher chance probability of the IFVG entry giving you way more points than using a market structure shift. It's also important to note that market structure shifts can also give you more drawdown compared to IFVG entries. Now for the next PRR concept, we're going to be using a SMT. These things are absolutely insane, and I'm going to be putting an SMT at the S tier, and the reason why is because it's literally a daily bias inside of a daily bias. And what I mean by that is that when you see that liquidity sweep on one of them and you don't see it on the other, and you form an SMT, then price gives you an IFVG, you literally have all three S tier concepts coming together, and it's just absolutely powerful. Whenever you see that SMT form, it's literally giving you confirmation that you were right. So whenever you get that extra confirmation that you were right on a trade, it makes everything so much easier. So I'm going to be going ahead and giving you guys an example with an SMT entry with the PRR strategy. Alright guys, so we have an SMT example right here, and basically we see that on the right side of my screen, I'm showing the wick at 929 on ES. Look where that is. Now we're looking at the same wick on NASDAQ at 928, 928, so basically a 1 minute difference. And look here, so we have this swing high, then price dumps, and pay attention to my cursor on the left, but also look at the right because it will show the same exact time on both charts. Look how even though we're climbing on both of them, look how on ES we are already taking out this swing high. So as you can see right here, I'm going to zoom in a little bit on ES. So as you guys can see on ES, I'm marking this out. Okay. Now, this is the same swing high marked on ES as the one on NASDAQ. So look, at 1049 on ES, price sweeps that high. Now look what's happening at 1049 on NASDAQ. 1049 on NASDAQ, we're not even at the fair value gap. We aren't even close to that swing high, but the swing high was already swept on ES. So all we have to do now is wait for price to form another reversal signal, and will be our bearish confluence. So when we see SMTs at the highs, this means that price is likely to go bearish. So what do we see here? We saw that fair value gap. We saw price retrace into the fair value gap. Now what do we see? Now look what we see here. We see the fair value gap gets inversed. Price ends up making a close below it. Then you can enter your short. You would have only seen around 10 points of drawdown, and then basically price retraces a little bit upwards. Then price dumps to take out liquidity under these lows down here. There's a lot of stalling in price today given it was a no news Friday. So that's the reason this SMT wasn't as good as some of the other ones, but this was a strong confluence that once we saw that inversion, then we can count that SMT as valid, and then we see price draw lower. Now guys, for the next one that we're going to be putting on the list, we're going to be looking at session liquidity raids. Now this could be New York session, this could be Asia session, it could be London. Now, I would put this at S tier, but the thing is, whenever you have obviously multiple session liquidities, it is very possible that one sweeps that liquidity, it then continues and goes to sweep another, meaning it is possible to get faked out of this. So I would put this at S tier, but I think it'd be smarter to put it at an A tier. Now I'm going to go ahead and give you guys an example of a session sweep with the PRR strategy. Alright guys, so now we're going to be looking at session liquidity. This is our London session right here, and basically session liquidity is just the highs and lows of the sessions. And as we can see right here, we have our low on London, and basically what happened is that we had CPI drop, and we had the low form. Price swept under the London low, and CPI took us almost to London high, and then we sold off from there. It's also important to note that basically the point of each session is to take the previous session's liquidity, at least one side of it, and we see that here with London, or we see this with Asia and London. The low gets taken out in London, and then the high also gets taken out in London. and then we had New York, and Asia took out New York's. So these are very reliable, and I like to use these with the PRR strategy. Now for our last concept, we're going to be going over a market maker model. I can confidently put a market maker model with the PRR strategy at D tier. And the reason why is because I do like trading market maker models, but the thing is with PRR, it just doesn't really work that well. And it is very much possible, but you tend to see a lot more chop, as market maker models aren't usually these quick, small moves. These are long moves that usually take over the span of hours. And the thing is, it will take a long time for your PRR strategy trade to hit, and it will also give yourself possibly a lot of drawdown. That's why I don't like trading in these conditions necessarily. I hope you guys liked that video. Once again, let me know if you have any questions whatsoever. Just join the free Discord. It's going to be in my bio right next to that free futures course, and just go in there and literally ask me any questions you have, and I promise to get back to you. If you guys would like to trade live with me every single day, there is a link in the description to get access to trading live with me every single day. So drop a comment on some other video ideas that you guys have for the channel, because I am kind of running low on ideas and I would love to hear your guys' feedback. Hope you guys have a good rest of your day, and I'll see you guys in the next video.